Hi everyone, welcome to Karan's Gyan. I'll kick off with the union budget that's going to come out on the 23rd of July at 11 a.m. So a lot of us are looking forward for this budget. A lot of us have had wagers placed in different sectors. I would just quickly discuss my take on what I think might be good sectors to invest in. So starting with introduction. So let's just understand more about the background of um, this union budget. So as we know, Modi has had much narrower than expected victory, and this leaves room for some populist measures such as increase in capital expenditures and increase to support consumption. At the same time, investors are also hoping that the government would continue with its policy of prioritized capital expenditures. Thus, we expect winners in infrastructure and heavy industries. But there are a bit more winners that we can possibly discuss. Talking about the budget is still like far away, 23rd of July. It's on a Tuesday, and we can expect that the government can balance further spending with fiscal prudence in order to control the deficit also. So maybe all of it might not go towards supporting consumption or increasing capital expenditures. But we must also note that the RBI has paid government a dividend of 2.1 lakh crores. So we expect that this capital expenditure that would support consumption would be supported by the dividend by the central bank. So the Indian government was expecting only 1 lakh crores in its budget. They were just expecting 1 lakh crores as dividends from RBI, but RBI has given 2.1 lakh crores. This leaves government with a surplus of 1.1 lakh crores that can be utilized in two places. Like I discussed, it can be used to reduce the fiscal year's borrowing. Previously, it was budgeted at 14.1 lakh crores during the interim budget, and a portion of it can also be used to increase consumption. So it's more like and. So both these things would be tackled by the government to expend 1.1 lakh crores. So just to give you a bit of idea, RBI just transferred about 87,000 crores last year. So this is almost 2.5 times of what RBI did last year. So we can expect some fireworks there. Um, Talking about this annual payout, do those who may not know, RBI usually gives this payout to the government, and it is their surplus income that RBI has earned in its investments and valuation changes on its dollars holdings. If I talk about other things that RBI earns from, RBI also earns from the fees it gets by printing currency. Moreover, the purpose of this payout, the payout of 2.1 lakh crore, given that it's 2.5 times higher than the previous payout, we must understand that this payout was actually meant for the new administration, so that when this new administration takes office, it can boost confidence in the markets by increasing spending and spurring economic growth. So we should not suspect that this money could go towards just fiscal years, just reducing the fiscal year's borrowing, but a good portion would be going towards spurring economic growth by capital expenditure programs. Hence, winners, infrastructure, heavy industries, rural economy, power, and housing. Again, these are not in a specific orders. I would ask you to do your own research and pick your own winners. Let's discuss each of these sectors in a greater detail. So, center stage for infrastructure. I expect roads and railways to be the center stage of infrastructure. This is a no-brainer because spending on roads and railways was always a constant theme during Modi's second term, and capital expenditure is likely to be on the center stage for roads and railways. Again, in the interim budget, the government targeted capital expenditure of 11.1 lakh crore in infrastructure department. However, since it's a coalition government right now, we expect some more money to go towards the coalition demands that um, the supporting parties may have. This can be between 30,000 crore to 50,000 crore. Again, boost in infrastructure. If I talk about possible winners, we have two categories. One category is engineering and capital good makers. We have Larsen and Toubro, Cummins India, Siemens, Adani Enterprises. And among that, we also have railway and shipbuilding stocks. They include railway Vikas Nigam, Titagarh Railway System, IRCTC, Mazagon Dock Shipbuilders. Dock Shipbuilders has another advantage to it. It is a defense stock, and I wouldn't be surprised if government invests a little more in defense because it would like to show that India is a strong nation. And again, Modi is not only trying to show that India can be a bigger economy, breach the $5 trillion GDP mark, but is also a superior country with respect to its military strength. And given the geopolitical environment, I won't be surprised if defense is also one of these sectors. Hence, Mazagon Dock Shipbuilders can be a good bet for both infrastructure and a defense hedge. Talking about the second sector, rural economy. Well, it's not a surprise here. The center stage would be welfare, farmer income, and the usual employment guarantees. So, rural and low income households might see some farmer support in tax breaks and various welfare measures. Again, Modi loves giving free things to everybody, hence, we expect free things to be given to the rural economy. Um, and the government could also see an increase in allocation to existing schemes that help boost farmer income, agriculture output, and other rural employment guarantees. Given that incomes would be boosted, welfare would be provided, we expect that such programs would aid the demand for consumer staples, and it would help shares like Hindustan Unilever and Dabur, both the shares. Moreover, other agriculture stocks and other stocks that might increase with increase in rural demand. It is UPL Corp, Coromandel International, Escorts Kubota, Hero Motor Corp, Bajaj Auto Limited. I forgot to add a share here. This share is Kaveri Seed. I think it can be a good fit with the boost in rural economy, agriculture linked stock. I forgot to add here, but please have a look by yourself and do your own research. Talking about the third sector, local manufacturing. Well, India wants to be the next China. In fact, not the next China, but India wants to be an credible alternative to China. India wants to be self-reliant. Hence, we expect some center stage around production-linked incentives. Um, so there are expectations for production-linked incentives for labor-intensive industries that would include electronic components, white goods, and various other labor-intensive industries. Uh, Examples of shares that one should watch would be Keynes Technology, Amber Enterprises, Polycab, CG Power and Industrial Solutions. Talking about power. Well, when you talk about power, the hype is in transmission and renewable energy. Renewable energy has always been the hype. So there would be spending on reforms in transmission and distribution of power amid surging electricity demand. We expect spotlight on Power Grid, NTPC, and Tata Power. We also expect further allocation towards green energy. As you know, India already has a vision of having 500 gigawatts of renewable capacity by 2030. I won't be surprised if the target is increased. And I also won't be surprised if the milestone of 2030 is increased by a couple of years because currently India is a bit far from what it is trying to achieve. So again, increase in capacity and increase in the duration of this vision. The stocks that would benefit would be Adani Green Energy, Wari Renewable and Technology, and Borosil Renewables. In this particular sector, I would recommend Borosil Renewables because it is a niche segment. It produces solar glass. And if I look at the other two shares, compared to the other two shares in this bucket, Borosil hasn't moved that much. So there is scope for a good jump in Borosil Renewables, a share to watch. Last but not the least, affordable housing. Again, this has intersections with infrastructure that I just talked about. Affordable housing is and welfare as well. Affordable housing is always something that makes people happy in the short term. So the interim budget also featured some outlays of affordable housing. So there is room for stocks in this sector to grow. Um, this sector has also had a slow growth compared to other sectors. It hasn't moved much. Um, Hence, we could see benefit in stocks of financiers such as HDFC and Punjab National Bank Housing Finance. Also, it would also benefit building material makers such as ACC, Ambuja, and Finolex cables. Again, this is my take on the possible winners for India's union budget that's going to come out on 23rd July 2020 at 11 a.m. If somebody wants to invest in futures and options, many of these shares that I've listed are on FNO as well. I would recommend buy a call option 10% down. Though I don't particularly recommend somebody play with derivatives, but if you feel that there would be a good jump in these stocks, such as myself, I would suggest maybe have a look at that or do some intraday trading. But if anybody is buying future and options, I would recommend them to close their position on the day the budget has released. Budget is releasing at 11 a.m. So please try to close your positions before 3 p.m. Make a good buck or cut your losses and leave. Well, that's it from my end. And thank you so much. Have a very nice day. Cheers.